a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about aerospace and defense stocks and ETFs, which surged last week after Hamas's brutal attack on Israel. So the war, this shocking attack, that has profound implications for geopolitical stability and for markets as well. So on last Monday, defense stocks, oil, and safe havens assets surged, whilst Israeli stocks plunged. And the conflict escalated rapidly, so that has raised questions about crude supply, mainly from the oil-rich Middle East region. And according to the Wall Street Journal, Iran had helped plan the attack, so which could derail the recent easing of Iran's tensions with the Biden administration and removal of restrictions on Iranian oil exports. So oil could go up further if the conflict escalates. And another major concern is that Iran-backed Hezbollah in Lebanon, which shares a northern border with Israel, might step up attacks. So Hezbollah is much more powerful and better equipped than Hamas. And if the war escalates and expands, then that could send these defense stocks higher even further. So if you are worried about escalation and expansion of this conflict, then you could probably look at these defense stocks and ETFs. Now, these stocks and ETFs had been underperforming earlier this year because of the possibility of or uncertainty about the military budget in the US. One thing I want to add is that if there are rising geopolitical tensions, then US as well as its European allies might consider increasing their defense spendings. And this is one of the very few areas that the two parties currently agree on, and that may boost these defense stocks and ETFs. So we are taking a look at three defense ETFs, which are quite different from one another. So first one we are highlighting is the largest in the space, iShares US Aerospace and Defense ETF. The ticker symbol is ITA. And as the name suggests, it holds aerospace and defense stocks. And it is market cap weighted, $5 billion in assets, expense ratio of 40 basis points. If you want to learn more about this ETF, you can go to the code page on Zacks.com, read our research report articles, and using the link, you can go to iShares webpage for this ETF. So this holds aerospace as well as defense stocks, as I mentioned. So Boeing is one of the top holdings in the ETF. And then you see names like RTX, Lockheed Martin, Northrop Grumman, General Dynamics. So when over the past week, these three stocks, Lockheed Martin, Northrop Grumman, General Dynamics, these are among the top performers. They surged between 10% and 16% last week. Boeing, being primarily an aerospace stocks, did not do so well last week. And so this ETF is quite top heavy, and its performance will be driven mainly by these 4 or 5 stocks. The second ETF that I'm highlighting is the most expensive in this space, in fact, but it is the best performer year to date. And this follows a slightly wider definition of this space. So in addition to defense and aerospace stocks, it also holds homeland security related stocks. This is also market cap weighted, but employs several screens, including revenue screen, in selecting its holdings. And after selection, holdings are capped at 10%. It has 2 billion in assets and 58 basis points expense ratio. And because of that cap of 10%, this is not as top heavy as ITA. So this is Invesco. You can again use the link to go to Invesco webpage for this ETF. And if you look at the portfolio, you will see that Northrop Grumman is the top holding, and Lockheed Martin, RTX, Boeing is there, but a much lower weight. Other top players in this space, General Dynamics and GE, are other top holdings. The third ETF that I'm highlighting is quite different from these two because it follows an equal weighting scheme. So this is also the cheapest with 35 basis points expense ratio. It has 1.5 billion in assets. And again, to learn more, you can go to the quote page, and using the link, you can go to the external web page for this ETF. And because of equal weighting, you will see a very different kind of portfolio. So same familiar names, Northrop Grumman, General Dynamics, and Lockheed Martin, etc., but very different weights. They are all brought to almost equal weight at the rebalancing time. Now, on the last slide, I have the comparative performance of these three ETFs versus the S&P 500 index, and all these three had surged last week, but because of the underperformance earlier this year, the overall performance over the past year is somewhat similar to the S&P 500 index. The Invesco product and the Spider product, they have done slightly better than the S&P 500 index, whereas the iShares product, ITA, has underperformed over the past year, and that is mainly because of underperformance of some of the top holdings like L3 Harris and Raytheon Technologies over the past year.
Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.